There is lots of talk at the moment about whether or not there are some opportunities to capitalize on investing into the emerging markets, so places like China, India, and Brazil as they start to potentially take off. In this video, I'm going to talk about a way that you could gain exposure into those markets through the FTSE Emerging Markets ETF on the Vanguard platform. What I'm going to cover is just a few quick details on that ETF. So looking at things like the objectives, the price, the performance, and whether or not it pays a little dividend. So welcome back to the channel. If you're new here, I'm Mark from Desperately Seeking FI. Let's jump over to Vanguard and have a quick look at the Emerging Markets ETF. On the Vanguard platform, we want to go into what we offer. We know it's an ETF, and then we'll go down and find the FTSE Emerging Markets ETF. Let's go and have a look at some of the fund details. Buy a full share of this ETF, we are looking at £44.51, and then just under 2,000 stocks within this ETF, and we've got an ongoing charge of 0.22%, and that is very similar to things like VHYL. Also, we've got the risk rating on the Vanguard platform of a 6 out of 7. On the objectives side of things, once again looking at passive management and an indexing approach. It is looking at an index comprised of large and mid-sized companies in the emerging markets, and the benchmark is the FTSE Emerging Index. And what we can see is a bit of a mixed bag for past performance, where we've had a number of years on the upside and a couple of years on the downside. And if we think about sort of what that is looking like in 21-22, that is something similar to some of the downside that we've seen in the markets over the last 10 to 12 months. It's been around for over 10 years, so since inception date on the 22nd of May 2012, it's got about 1.7 billion in the total asset side of things, and it does pay a quarterly dividend. So on the price and performance tab, let's see what other information we have. So we have a high at just over £51 and a low at just under 41. Let's have a quick look at things have gone up a little bit over the last week. On a month, a little bit choppy. 3 months, a lot choppier. It is a bit of a downward channel over the last 6 months. Over the last 12, once again, a similar downward trend. And over the last 18 months, continuing down from about £75 per share down to current price of about $55. Past performance, we've touched on that, but the 3 years of some growth and then the 2 shoulder years in 2017-18 and 21-22, we are seeing some downside. The ticker symbol for this ETF is VFEM. About 2,000 stocks within this ETF. PE ratio of 9.6, P/B is 1.8, and return on equity about 15%. Almost 100% within the emerging market. We're then focusing in on the geographic spread for this ETF. So predominantly China making up almost 30%, then India at about 20, Taiwan at almost 15, and then into Brazil, and then smaller holdings in other emerging markets. And some people will say whether or not Taiwan should be in an emerging markets ETF, but in this case it is and makes up about 15%. And then the weighted exposure into different sectors, the top 3 being financial, technology, and consumer discretionary. And then let's have a look at some of the key holdings within this ETF. So TSM, Taiwan Semiconductor Manufacturing Company, holding about 5.39%. Tencent, Alibaba and Reliance Industries, all at over 2% in the holdings. And then you get down into some of the Housing Development Finance Core and the Construction Bank. And if we do think about, there are some issues in China at the moment. I'll come on to it in the thoughts that I have on this ETF. Looking at a quarterly dividend distributor, and we've got a yield of somewhere in around 4%. And if we have a look at some of the other videos that I've done recently on things like VUKE, VHYL, they are all in around that mark of approximately 4% on the dividend yield. So once again, potentially another opportunity here. And if we look at how much it has been battered down, potentially you also have the ability of having some growth. What is this going to cost you? So the ongoing charge is 0.22%. And don't forget, if you were to invest onto this on the Vanguard website, you are going to end up paying a 0.15 handling charge as well. So that's just a very quick overview of the ETF on the Vanguard platform. What are my thoughts? There are opportunities, I think, coming up in the emerging markets. That said, there are some risks as well. So we still have China going through their zero COVID policy, which is really, we've seen in the news recently with the riots that have been happening, there is a bit of discontent within the country, particularly from the younger population, on not being able to release from those restrictions. Potential risks from the housing market, but there are also potentials. If we do come out of the lockdown period, you could see quite an increase in productivity from China, even though GDP is being forecast to grow at a lower level than we would normally expect. We would normally expect to be seeing 5 to 6% GDP increases in China, but potentially we are somewhere in around that 3%. Some other potential options to buy into would be the HSBC MCI Emerging Markets ETF. This comes in at a slightly lower ongoing charge of 0.15, but you then also end up with a slightly smaller dividend yield. And that basically comes from the geographic allocations are slightly different, but reasonably similar, and you are looking at slightly different companies within the actual laydown. But as with everything, do go away, do your own due diligence and see whether or not this is something that is within your risk appetite to actually go for. I have only gone for a very small allocation and it's running at about 5 to 10% of my total portfolio allocation, and I've only just started investing into that to build up towards that position. If you find value in this content, I'd love it if you could give me a like and think of subscribing, and I'll see you in the next one. Cheers, bye.